this was the first year, second year, this was the 13th year, we can just put 14 in this formula, or 15 or 16 or 17, and then the valuation based on time is known. Same for stock to flow. We know the halving is in 2024. We know what the stock to flow ratio will do. It will double from today's stock to flow ratio, and we can plug that into the model and derive a value. So only those two models can be extrapolated, and you can see that this is exactly where I got my 100K to a 1 million Bitcoin range from that I predict in the next halving cycle.
Bitcoin and the cryptocurrency market have garnered significant attention over the past few years, with enthusiasts and investors seeking to understand the factors influencing Bitcoin's price. In the midst of the market volatility, PlanB aptly reminds us that correlation does not imply causation, and Bitcoin's price is influenced by many factors that are excluded from traditional models used today. With macroeconomic effects like Federal Reserve policy, inflation, interest rates, and money supply, these all play a vital role in shaping Bitcoin's value. PlanB has been sounding the alarm on Bitcoin's coming price surge, and with the 2024 halving right around the corner, he predicts a crypto tsunami, the likes of which the world has never seen. Let's get into the latest interview with PlanB to explore the newest insights on the world of cryptocurrencies and investing. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
How good are those models really? We could look at the goodness of fit, R squared, which is 97% for the time model, stock to flow model, and the UTXO model, and it's 94% for the difficulty model. But then R squared doesn't say anything, and I guess the very important thing to remember is correlation between those four factors and the Bitcoin price is not causation. The relation can be spurious, it can be incorrect, so you should always remember that. And also, those are very simple models based on one factor, so you can't expect those models to be 100% correct. 94 and 97% is actually quite good, and 100% would be impossible with these very simple models based on one variable. Some people even say that models are invalid and useless because variable X, Y, or Z is not in there. Like, okay, demand is not in there, so the model is not useful. Or the dollar M2 money supply is not in there, so the models are not useful. That is not true. That's not true at all. I mean, yes, a lot of factors influence the price, not only those four factors. All the macro factors like the Fed and the inflation and interest rates and the money supply of the dollar. You have the SEC with their ETF approvals. You have exchanges that go bust like FTX recently. All those factors have an impact on price. But most of those factors are random events. The Russia war, who could have predicted it? The mining ban of China in 2021, who could have predicted that? Those can't be modeled. What we are looking for in models is the bigger structural factors that play a role in the valuation.
PlanB introduces an array of 4 distinct valuation models designed to analyze Bitcoin's worth over time. These models include the time model, the stock-to-flow model, the difficulty model, and the UTX model. Each model takes into consideration various factors that contribute to Bitcoin's value evolution. The time model, represented by a light blue line, centers on approximating Bitcoin adoption over time. According to this model's logic, as the adoption of Bitcoin increases, its price is expected to rise accordingly. The stock-to-flow model, depicted as a dark blue line, assesses Bitcoin's scarcity by analyzing its stock-to-flow ratio. As scarcity intensifies, the model predicts that the price of Bitcoin will surge. The difficulty model, shown in red, tracks the network power of the Bitcoin network. In this context, a higher network power is associated with a higher Bitcoin price. And the UTX model, presented as a green line, focuses on evaluating the distribution of Bitcoin over unspent transaction outputs. The wider the distribution, the model predicts a corresponding increase in Bitcoin's price. By employing these 4 models, PlanB predicts a price range for Bitcoin during the next halving cycle, estimating it to fall between $100,000 and $1 million. These models provide valuable insights into the diverse facets that contribute to Bitcoin's value, offering a nuanced perspective for investors and enthusiasts seeking to comprehend the cryptocurrency's potential trajectory. PlanB also emphasizes that despite these models' relative simplicity, their predictive capability is outstanding. Recently, a number of big investors holding millions of dollars in BTC moved their holdings last week after years of dormancy. On July 20th, two wallets from 2011, each holding 10 BTC valued at $292,767, moved their holdings to new locations. The next day, a wallet holding 5 BTC, over $146,000, budged after 12 years of inactivity. Then, around $30.3 million in digital gold, at just over 1,000 BTC, moved after its owner put it in a new wallet for the first time since 2012. And on July 24th, a wallet from 2010 moved a hefty 50 BTC, valued at $1.4 million. Bitcoin whales who hoard huge amounts of at least 1,000 BTC or more and don't touch it for years are sitting on astronomical gains as a result. Such investors have proven to be more successful than traders that buy and sell Bitcoin over the short term. But over the past 10 years, it's shot up from under $95 per coin to $29,203, a 30,700% increase. In a report on Monday, blockchain data shows there has been a dramatic uptick over recent months, and noted that a number of whales have been moving holdings to exchanges, usually the best way to cash out or shift holdings to other digital assets. It isn't clear whether these whales are individuals or companies, but it's possible that these transactions represent commercial entities buying Bitcoin from individuals. Another big story making waves this week is an initiated investigation into Worldcoin, the cryptocurrency project founded by OpenAI's Sam Altman. Regulators have expressed concerns about what it deems as questionable practices adopted by the project. Doubts have been raised about the legality of Worldcoin's data collection methods and the conditions under which biometric data is preserved. Specifically, it was pointed out that Worldcoin employs retina scanning as a means to prevent individuals from claiming cryptocurrency rewards multiple times. This recent scrutiny underscores the importance of ensuring compliance with data protection and privacy regulations in the crypto industry. As the investigation unfolds, Worldcoin will likely face increased inquiries to address and rectify any potential privacy and data protection issues identified by the regulatory body. On Monday, Worldcoin went live, and its proponents argue that it has the potential to expand cryptocurrency adoption beyond Bitcoin. What do you think about the latest interview with PlanB, and what are your thoughts on his price prediction for Bitcoin in the coming months? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.